I just want to go to a concert, man. That's like my thing. That's what I miss out of everything. I could stay home all day. I just want to go to a concert. I mean, I'm not even picky right now. You know, I'll take anything. I hope they all just flood the world with their venues, and we have a hard time deciding. Hold on to your stimulus money, you know? Hey, welcome to the Closing Beat, everybody. Special recorded edition for a Wednesday because, well, we're busy. We've got things to do, and I wanted to still make sure this got out to you guys. I love doing this show for you. Welcome. Thanks for watching here. We are probably doing this in the premiere feature, so you guys can still chat and have fun with all your political comments and all that stuff. But we're going to talk about the stock market here today, and, you know, if it was a day that you missed, you didn't miss much, right? I mean, it's kind of like, I would say a narrow range day is what I would focus on. Besides the Russell, if you look off to the right, the Russell was the worst performer on the day. But besides the Russell, pretty narrow range day, mostly for the indices there. I want to show you something real quick here. And what I mean by narrow range, if you're one of our clients and you don't know, or even if you're one of our research members, go on into the dojo. It's our private portal. We're expanding it, building the devil out of it here. But if you go in here and just search candlesticks, and it should just automatically populate for the three classes, whether you're a research member or whether you're candlesticks, whether you are a client of ours. You can watch all three of these classes. And I just kind of go through them to show you, you know, how do you interpret what you see right here? Right, so what's going on with all this gobbledygook? Well, today's a narrow range day, and you'll know from the candlesticks class that a narrow range day is simply one of three different candlesticks that you can have. There are 13 in total. It's one of three that tells you there's nothing you can do. You would stay with the trend, but you need more information before you either buy more or take some profits or look to buy more on a pullback or whatever. You just don't have any information there. So it's kind of one of those days. If we go over to the Russell 2000, that was your worst performer today, the only non-narrow range day. Worst index there, it's healthcare and biotech-ish kind of stocks today. Industrials were the weakest. The Russell's still up 12% year to date. Some of the names down today, one of the industrials, Plug Power, continues to pull back. Looked like it was putting in a bottom there. Now I'm not so sure. Maybe a higher low, but right now today's move makes it one of the bigger industrials to sell off on the day. What else do we have here? You got Fibrogen, FGEN. That's why I don't like messing with these biotech stocks, man. Big decline today. It's going to be about 43% lower on the day. If you ever play biotech stocks, you got to be very small with those or very confident, one or the other. They had some FDA news come out on one of their dialysis/kidney type drugs that they're working on, and got a couple downgrades, and that works for 43%. We don't happen to own that one, thank God, but just a tough one there. We do still have some MarineMax in our small cap fund. That was our worst performer there. Kind of working our way out of that position, 5.5% to the downside there. And one other, just to not point out winners all the time, MI Homes. You've probably seen them in your area. It's one of the home builders we have in our small cap fund. Just started to pull back a little bit. All in all, the trend still looks really good there. But just wanted to point out some of the biggest decliners because I don't like to be that guy that's like, this is a winner, this is a winner. It doesn't always all go well. If you look at the NASDAQ today, the best index, by the way, as far as the performance goes, and it looks like, at least lately, kind of looks like it wants to catch up and give the old Russell a run for its money. It's up about 6% year to date, puts it in fourth place, for the best performing indices out there. And today, that FANG rotation that I mentioned in our notes from Jazz email, that continues. Apple up 1.33% on the day. Amazon was a big contributor as well, 1.7% gains on the day. You got Facebook in there hitting new 52-week highs as well. These were your movers. This is what kept the market from going lower on the day. Semis also helped out a little bit, but they did their part, so I won't knock on them. But FANG plus Microsoft, that's the key here lately, and I talked about that on Saturday in our notes from Jazz email, and that's what's going on. It's kind of the same thing in the S&P 500, which if we take a look, I'm just going to go to the 5-minute chart, and we're going to just say, all right, let's look at just today. So there's just today. Your flat line is about right here, right? Just right about the 200-day moving average. And you see positive, negative, finishing out the day positive. tough day to really have anything going. It's kind of a trader's day out there. And so, like I said, if you missed anything in the markets today, you didn't miss much, basically just sitting at highs there. Now, the S&P also giving the Russell a run for its money, up 9% year to date as of this exact close right here where it's heading, but largely undecided there. Materials and Tesla were the weakest today. We'll cover materials in a second, but Tesla continuing to pull back down about 20 bucks on the day. If you look to the bright side there, you've got Essex Property. It's a REIT. Nice continuing of the uptrend there, up 2.5%. It's one of the best performers in the S&P here today, along with Facebook, of course. We talked about that already. Limited brands breaking out. We'll cover that in a little bit. And I'll point out Twitter continuing to bounce off the 50-day, not looking too bad there. What you have here is this rotation sort of out of value back into growth. And I mentioned that in our Notes from Jazz email, the idea that those big cap growth names were going to continue to be, are getting the attention and continuing to be the focus there. One of the classes that we did for clients just a couple weeks ago was a particular trade that I put on where I talked about the difference between value and growth and how to actually trade that. So if we go over here, I just want to show, I'll do year to date to zoom in a little bit. The spread between value and growth was wide, and not only that, value was leading the way. That's not common. So recognizing that that wasn't common, I'd put on a trade to short value and go long growth. And I explained all the different scenarios where you make a profit, where you make a loss. Well, what's happening there, and I'm going to close this trade out now because growth actually has recovered quite a bit, right? Almost 6% here in just the last few days, where value has just ever so slightly pulled back. So what does that tell you about the position that you would have? If you're short value, long growth, it tells you that maybe you made $1 or $2 here, not really much. The value we didn't fall, so I'm not making a profit on the short, but the growth position makes the profit, and as a pair, you take those off for a net profit. That's the goal there. So I did a class a couple weeks ago to explain that in greater detail, where it's not always about picking a stock you think is going higher. Sometimes there's other oddities in the market that you can recognize that can help you make a profit. So I just want to point that out. Let's go to the sector breakdown here today. Look at off to the right. You got all the sectors there. Materials down 1.76%, and then everything else off to your right didn't gain or lose more than 1%. That's just the kind of day it was there. If you take a look here, you got materials as your worst performer, your outlier for the day, not a problem there. But tech and communication services up here at the highs there. The growth area of the market continues to do well. And I'll point out that's FANG plus Microsoft. That shift continues there. If I go over to communication services, which was your top performer today, at new highs, all looking good there. It's in second place, by the way, for year-to-date gains. So you go year-to-date. It's making a run for second place. So second place is financials off to the right. And now you have communication services. If we could just kind of see it in the brown, right? They're all color-coded. Take a look at brown there. We fell down to like fifth place all the way back up here to third and making its run, which would continue to do if you have Facebook and, of course, Twitter and things like that. So let's go today. We look overall for today. You have two of your FANG stocks that are included in the communication services sector that actually were the biggest contributors there. So the top three, two classes of Google, did well. Twitter did its job. Netflix is the only one that recently, if I go to the 5-day here, look at Netflix. It's okay. You know, it's not great, but it's okay. I would argue that the N in FANG, you might need to consider NVIDIA, looking over in tech if you're interested in that. But over the last 5 days, here are your top contributors. It is the FANG names that's coming back. That's something I've been just sort of harping on there. If we go over to tech, though the semiconductors have been the driving force here in terms of gains, like look, I'll sort by returns over the last 5 days. Semiconductors, I'll just click on one so you can see the others up here. They're all the best performers in terms of percentage return. Well, if you look at the contributors, you're going to have Apple of your FANG stocks and NVIDIA, the bigger contributors over the last 5 days. If we look to just today, let's get rid of that. Let's go back to Apple. We'll take that off so it shows the sector. Tech in general, basically sitting at those highs today. All in all, it's an Apple-led kind of rally with NVIDIA right behind it, the top performing semiconductor right there. Not bad. I sort of welcome that with what's happening there, but you just got to be able to identify that is what's happening. If you look at materials, that is your worst performer today. Not always exciting to talk about the things that are down, but this has been a strong sector, so not too bad. Not too bad there. You're welcoming the pullback. You're not interested in that. You look at a broad sell-off in the whole sector here today, and just kind of digging through some of the biggest contributors. Sherwin-Williams, Linde, it's like a gas provider there, and Albemarle. I want to point out, I never say that name right, but if we look at some of the bigger losers there, you're going to find that on your list as well. Also, you can use this tool for sorting through the sectors in any way you like. A lot of flexibility there. Pretty cool. If we go over to the new highs for the day, there's not a lot of them, and the new highs list continues to be the list to look at for pullback ideas. So case in point here would be Sherwin-Williams, right? If we look at Sherwin-Williams, we talked about this making new highs, all exciting, lots of support, and it started pulling back. Well, that made new 52-week highs over the last couple days. It did it again today, but now starting to pull back. So let that settle down. That may be something that we're interested in there. Just pulled back with the materials sector today. That's what you have there. Facebook hitting new highs. This is the FANG momentum, right? The FANG momentum. You could see that from our notes from Jazz email, but now, if you're not in it, you want to pull back. That's it. You don't want to chase it. You just want that pullback there. Limited Brands breaks out here today. UBS, they did an upgrade of a handful of retailers. Limited Brands stood to benefit the most out of all of them, thanks to Bath & Body Works. Victoria's Secret, still not the shining light of the company there, but Bath & Body Works doing really well. So UBS had some positive comments there. Stock was higher on the day. I believe they had a $96, $97 profit target. UBS says it's a buy, $96. They had a $54 price target. They're raising it all the way to $96 over the next 12 months, so that one stands out. And then just a couple here at the bottom. You got NVR, both of the next two stocks I talk about. These are lessons in playing breakouts on, we'll call it, short-term extended markets, right? So you would normally look at this and say, oh, we're breaking out new highs. I otherwise have nice, strong momentum. Got a good industry here. All is looking good. But the problem is I've got a market that's also maybe just a little extended. Look at the S&P 500 here. It's already had 4 or 5 days in terms of a good move. Go watch our class last week in the our Wine and Wealth class, where we talked about that sort of sequence that the market likes to follow. It does not like to be up 8, 9, 10, 11 days in a row. It's very, very rare that happens. And so now we're finding ourselves maybe just a little overbought, ultra slim overbought here in the short term. So do we want to play breakouts when the market may not be supporting that move? Well, with NVR, you think, okay, new high, it's exciting, but it didn't have that momentum, didn't have the volume, didn't have that broad index-based buying that you like to see. And I'll do the same for Principal. An otherwise really nice pattern, but why didn't it go today? What's the problem? Narrow range day. I can't buy a breakout with a narrow range day. I want to see people participating. And we just didn't have that in the market today. So if you recognize those little things, that now's not the time to play breakouts. Notice how the last couple of days I haven't been saying it's broken out, it's a good one, it's solid, there's a lot of volume there. It's just not to be had right now. We got to let the markets calm down ever so slightly. All right, let's go to stocks in the news today. You got AMAT. This was that momentum play that I had the other day, got out way too early. Price targets increased all across the board. Lots of different analysts, Wells Fargo, Mizzou, Goldman Sachs, all raising price targets across the board. Anywhere from like 155 to 170, those are the price targets. Remember, that's over a 12-month period. That is not in the short term. Carnival Cruise Lines was a little bit higher. It faded by the end of the day. The CDC says that cruises can begin in midsummer. I don't know that there was a hard date there. I think Norwegian Cruise Lines made it clear they're shooting for July 4th. So the CDC coming around on that one. So good for them. Home builders. We talked about MI Homes a minute ago. Here's LGI Homes. Sees their March closings up 44%. The demand is there, man. The demand is there. The problem is the stock has already had to move in anticipation of that demand. We all see it, right? We happen to own this stock, but you all see the demand out there for homes. All is good. Everybody wants to fix them up, buy them, flip them, rent them, do all that great stuff. And a lot of people now are looking at second homes. It's fascinating, the comments, the questions I get from people about positioning themselves to buy a second home, a vacation home, a rental home for the vacation purpose. It's kind of neat. You can feel that tide sort of shifting there. Anyway, so that's one of them in the news as well. Not a headline stock, but JP Morgan is. Stock's up 1.5% today. We happen to own this one. Jamie Dimon. I happen to agree with him. I like Jamie Dimon myself. He said valuations for stocks in the stock market are high by every single metric besides interest rates. And he also said it's hard to justify the price of U.S. debt. What he was basically saying there was, how does one invest in U.S. debt at this point? The price is just not reasonable relative to what you get. Same with stocks. It's high valuations on all metrics across the board. I would agree with that. However, that doesn't mean the markets fall. Right? So if people are willing to accept a certain price, look at Tesla, for example. People are willing to buy a Tesla seemingly for whatever price they cost. They just want to buy a Tesla. They're all over the place, right? So if people are willing to absorb that, then it's no big deal. As long as that sort of music keeps playing, people are happy with that. In the stock market, it's the same thing. Valuations can remain stretched for very long periods of time. Did a study on this years ago where we talked about how when valuations become extended by any, we use 6 metrics at the time, how often do they stay extended where you would have missed out on all these returns? So you can't use that as purely a timing kind of an indicator. It would not be profitable for you from at least a couple years ago. Uber, so down just a little bit. They're going to spend a ton of money, about $250 million to try to get more drivers. They need more drivers. They see the demand there. It's good news in the mid to long term for Uber. But in the short term, the fact that they have to spend money, they're having troubles with profitability and things like that, pushes the stock a little bit lower. Lost about $1 today. Not too big of a deal there. Moving on, we have Simon Property paying $1.30, General Dynamics $1.19, Darden Restaurants 88 cents, that's Olive Garden, things like that. Verizon 63 cents, AT&T, your two dividend-paying type stocks that people look to, low volatility, paying out 52 cents. General Mills 51 cents there, MasterCard 44 cents, and Network Appliances, NTAP is a ticker symbol, 48 cents there. Tomorrow, you've got 3 Fed members speaking. Jerome Powell, the president there, will be speaking at about noon, I think it was, Eastern time. Somewhere around lunchtime, Eastern time, it'll be on there. No doubt that gets attention there. 2 other Fed members speaking before and after, so a little attention there if that's something you're interested in. All right, we'll wrap it up there since I don't have any questions to take today. Just a rare one, little recorded version of this here. We're not leaving you. Don't worry about it. I appreciate all your support, really do. That helped us get to 100,000 subscribers. We obviously want to keep the train rolling, and we're happy to help in any way. Also, I see the comments. I can't respond to the comments yet, but that rule is changing with the SEC. Pains me not to be able to respond to comments. Now, if you're mean, I'm going to fight back. But things that I can help with. It pains me not to answer that, but that rule is changing ever so slightly there. So I think there's about 40 days left before we're actually able to do things that are, a little bit better than what we've been able to do. Take the chains off a little bit of some of the restrictions that we've had. So that's it. I hope you have a great rest of your day. Thank you so much for watching. We will see you tomorrow.